All right, good morning. How is everyone doing? So let's break this trade down, starting with the daily time frame. I think you guys remember that we were looking basically for price to reach into this fair value gap right here. But our main focus was right on the Monday's high because it was a fake high. It held quite a lot of buy side liquidity above it because notice that it stopped just a few pips below the low of this daily bearish fair value gap right here. So if you would measure from the Monday's high to the low of this bearish fair value gap, you can see that we have 2 pips holding buy side liquidity above it. So now, taking advantage of this short-term bullish momentum right here, I think you guys remember when we talked about that we need to see a deeper bullish pullback. That price been running in one-sided move right here. We didn't have any pullbacks. He only had 1, 2, 3 bullish candles right here, but we didn't see any deeper pullbacks. And we were expecting for price to eventually give that to us. This is exactly there has happened. Notice that price ran this sell side liquidity right into the bullish higher time frame PD race. We had this daily bullish fair value gap overlapping this weekly DPR, etc. And price consolidated a little right here and started climbing to the upside. So when it reached into this weekly bearish fair value gap right here, you can see that we had the reaction when it ran right into this bullish fair value gap right here. And notice what it left. It left an outside candle. Because this candle right here, reacting to the bearish weekly fair value gap, it ran both the high and the low of the previous candle's range right here. So in other words, it shook out liquidity from the previous day. So what we do next, we look left, what happened before that? We were on a bearish run or we were on a short and bullish run? If we look left, you can see that we were on the bullish run. So what this becomes right here is a potential shakeout, a potential liquidity shakeout. So when that happens, when price gives a direction, and then eventually it gives a liquidity shakeout into a PD ray. In this case, you can see that we had this bullish fair value gap right here. It ran buy side liquidity, sell side liquidity into bullish PD ray. This high becomes as well a buy side liquidity pool, which on a bigger time frame right here is this outside candle. So price ends up going higher, taking out this buy side liquidity as well of this high right here, and it stops just 2 pips below the daily bearish fair value gap right here, making this a fake structure on Monday. Now I will attach of what we've been looking for here on the higher time frame. So we're all, you guys remember that we were looking for this bullish pullback to eventually take place and price shoot to the downside once more, confirming a weekly bearish order flow from that point. So obviously we have elections and we had this massive candle right here, a 220 pip daily candle, which is just crazy, which is absolutely insane. But yeah, what comes to this bullish run, I think everything is clear after this Monday candle, taking out the buy side liquidity of this shakeout outside candle right here, stopping just a couple pips below the daily bearish fair value gap. So yesterday opening up, we knew that price either on Tuesday or Wednesday will be taking out this high and running into this daily fair value gap. We didn't know, of course, how deep it's going to run. Either it's going to stop and reverse from there like it did right here, or it's going to reach into the monthly BPR, etc. We didn't know that, of course. But here on this day, yesterday on Tuesday, ideally we wanted to see simply price continue to taking out this fake high right here. And this is where our trade was born. So let's drop to the lower time frames now. So now from a 60-minute time frame perspective, you can see that we were overall, if we zoom out, inside of this bullish run to the upside. You can see that price was running sell side liquidity, forming strong lows right here, and seeking for buy side liquidity. Then what we had another consolidation, shakeout, strong low, 31st lesson type of a low, and price expands to the upside, taking out the buy side liquidity. And what happens after that as well? Price builds liquidity, takes out the high, takes out the low, forms a strong low right here, running into the bullish Peter race. Here we had overlapping daily time frame and lower time frame Peter race, and took off to the upside, taking out the buy side liquidity again. So overall, I think you guys can clearly see that we are inside of this daily bullish pullback, and on the lower time frames we had this order flow to the upside, which was pretty clear. So right here, what we had, and you can see that we had this dealing range, and we had the discount right here. The main negative and the main problem that we had, I think you guys remember, is this sell side liquidity price didn't drop into the discount side of the range. Not that it necessarily needs to always drop into the discount, but of course, we simply don't like to trade away from such liquidity pools like this. So this was the main negative out of everything. We had a very clear magnet area drawn liquidity that we were aiming for, which is this zone right here. But the two main negatives stopping price from giving this expansion to our targets was this consolidation, this sell side liquidity pool that was resting right here, and this barrier right here that ended up turning into inverse fair value gap, something that we talked about in the morning analysis, that if price ends up breaking through this barrier and uses it as an inverse fair value gap, as support in other terms, this is when we would be looking for New York to continue higher. But despite that, we pretty much knew that price will reach this hourly bearish fair value gap before it either continues higher or drops to take out the sell side liquidity right here and then shoots the upside. So in this case, obviously this scenario would be better because we will have this quick sell model right here turning into a bigger buy model right here. So quick scalps into day trades right here. But again, this trade was born with an idea that if price somehow ends up breaking through this area, through this barrier right here, there's a lot of potential for it just to continue towards our main draw on liquidity right here, which ended up happening even though we got stopped out by a couple pips. But we had 10 a.m. news anyway that because of spreads would have shaken us out of this position. So nothing to be mad about. We banked a couple targets. Flurry still took advantage pretty well of this run to the upside. So that's not what comes to the hourly time frame. I think you guys can clearly see that overall we had this bullish lower time frame order flow. We had a very clear draw on liquidity right here. During the PM hours, an Asia range price left a lot of sell side liquidity and price started pushing away. So this is very hard. 15-minute and execution time frame confirmations right here. Because without them, if this would have not lined up to perfection, we obviously would have stayed far, far, far away from this trade because this was not our usual trade. This was not our typical trade because in most cases, we would wait for 15 minutes to completely isolate this sell side liquidity right here, and only then we would start looking for continuations higher. And that did take place during the near kill zone right here, rejecting this inverse fair value gap, which from this point during near kill zone wasn't a barrier, it became a confluence factor, acting as a potential support to send price higher towards our main draws on liquidity. But what comes to this area trade right here, everything will be ball clear when we drop to the 15-minute execution time frames. So let's do that. All right, so these are the notations that we have. Stopped right below the daily bearish fair value gap, slow potential fake high, buy side liquidity pool. And this is exactly, again, what we ended up targeting here. But now strictly focusing on the trade that I took right here. Trade was taken from the 15-minute time frame point of view as an institutional order flow entry drill type of a move. On the lower time frames, we had ourselves this very clear short-term magnet area. This hourly bearish fair value gap acting as a naive area, and price came pretty close to it right here, but didn't fully reach into it. You can see that price stopped 3 pips below, and then it started retracing to the downside. So now from this point, main negative that we had, of course, was this very clear, very massive sell side liquidity pool, and of course the discount side of this hourly dealing range because price was above it, it didn't fully reach into it. So these were the main negatives, as well as we had this on our BPR. So again, as mentioned before, ideally we would have wanted to see price drop into it, running all the sell side liquidity, bottoming out and running higher. But not always there's enough time in price delivery for that to happen. Sometimes when we have a clear draw on liquidity, it just keeps on climbing. And this is where I simply with this trade took a bit more risk than I normally do, because this wasn't our A+ type of a setup, something that we always take. Hence why below my analysis in our community, I mentioned that I risk half of what I normally risk on our A+ positions. But what we had overall, starting from the higher time frames, we were expecting from a daily deeper bullish pullback to take place. From lower time frames, we had a clear bullish order flow, very sharp bullish order flow, 31st lesson lows and stuff like that. We had a very clear buy side liquidity pool right here. And right after the open, what we had there from execution time frames was a small SMT divergence right here. And on the 15-minute time frame, you can see that price rejected this bullish fair value gap right here. So in other words, we have some signs of price starting to climb higher towards the hourly bearish fair value gap right here. So as it stopped very close to it, this is where I started paying attention to this fair value gap, because this small move to the upside from this point to this point, from this fair value gap, if execution timeframes aligns towards this hourly bearish fair value gap, was pretty much clear. However, if it would have been just a scalp move and we wouldn't have all the other pieces of the puzzle and all the potential for price to keep on running towards these bigger targets right here, turning this into almost a 7-hour move, obviously I would have not even entered this trade, because for a scalp like this, in my opinion, this move would have not been worth it, even though it made a lot of sense, even though we had this tiny draw on liquidity right here for this cap to happen, etc. All the sell side liquidity that we had below. In my opinion, my personal opinion, it would have been a bit too risky of a trade. But if we talk about surviving all of this consolidation and potentially seeing it run and become a 7-hour move, because we had pretty much everything in place for that to happen. In other words, even though the whole picture wasn't ideal, wasn't completely perfect, it still had potential for this trade right here from this long scalp opportunity, banking some partials around the fair value gap low, of course, what comes with this hourly imbalance, but leaving some run higher in case it keeps on running towards the main draws on liquidity. This is where I saw potential from this trade, and this is when, for me personally, it was okay accepting if this trade doesn't play out, okay, I will take a loss, but if it keeps on running, it will turn into a very massive trade. And again, it had a lot of components and it had a lot of potential for it to keep on running and for near kill zone to give us a continuation from that point. So I think you can see what happened here. Once price started dropping into this bullish 15-minute fair value gap right here, this is when they started focusing on the execution time frame. So let's do that as well. In regards of home management, you guys saw on the time lapse that I showed you yesterday, when I took first partials, when I took second partials, and I removed the risk and everything else. So here, right after the open, after the match right here, notice that price started consolidating, but we had some SMT as mentioned before, which was a pretty nice confluence factor for price to continue at least to this bearish hourly fair value gap right here. Price dropped into this bullish fair value gap that we had on 2-minute, which was aligning on the 15-minute as well. And from that point, we saw this massive run to the upside. Now, price stopped right below the hourly bearish fair value gap, and it came in the form of a bear trap, which is also something that we love seeing when price stops right below a certain area that we knew is acting as a draw liquidity for that move to take place. Then we see a potential bear trap taking place that happened right here. Notice that price formed some liquidity, it took out the high, then it took out the low into bullish fair value gap, which wasn't just a bullish fair value gap, it was a 15-minute institutional order flow entry drill setup. Then it gave a run higher, taking out this high right here, leaving clear bullish P raise, bullish fair value gap, bullish order block right here. It rejected it nicely and started running to the upside. First, taking out the bear trap buy side liquidity and then reaching into our short-term draw liquidity, which was this one, our bearish fair value gap. So I think you guys can see how everything nicely aligned here. We didn't only started the day with this bullish order flow, but we also had enough potential to frame this entry towards this 1-hour fair value gap. And by this point, when price already reaches into this, it will be around break even already. So there will be nothing for us to worry about. And the fact that this hourly imbalance was on the plate, it was pretty clear and obvious because again, as mentioned, they had a 15-minute institutional order flow entry drill type of a scenario with execution timeframe confirmation, which happened in the form of a bear trap right here, which wasn't just a bear trap, it also was a fake high because it stopped right below this hourly imbalance. So I think you can see how many pieces of the puzzle nicely align here. So once price ended up running buy side liquidity, sell side liquidity right here into the 15-minute imbalance, I of course wasn't comfortable taking this as a 15-minute institutional order flow entry drill type of an entry right away. I waited for execution timeframes to give us some confirmations, and I was completely okay if price is going to just shoot right into this 1-hour bearish fair value gap. Okay, I will be staying on the sidelines waiting for the near kill zone to give us something. But in this case, what price did, price took out this high here and started retracing right into this bullish fair value gap and bullish order block right here. I saw this reaction take place, and this is where I entered with my stop loss covering the consequent encroachment of this 15-minute fair value gap. And after that, as you guys saw in the time lapse, price ran right towards our first drawn liquidity, our short-term drawn liquidity, which was this hourly imbalance. It was our T1. We took some partials, we moved stop loss around break even, and left this trade run. Now, what comes to key two and how I came to this second point for partials, it was pretty simple. I think you guys saw that we used extensions right here from this low to this high right here. That broke out on this execution time frame. So at first it wasn't showing anything, but if you look further, you can see that right here. What we had very close to it was an institutional level right here. So as always, you guys know that we stack on-flans what comes to these citations. So we had this particular level aligning very close to this institutional level. Then what comes to our T3, I think you guys remember from the 15-minute time frame, if we added this as well, which would have acted as our T3 target tree, but we got added out the point trend, so unfortunately. But when we measure the midpoint from T1, the low of this hourly bearish fair value gap, to the T3 right here, we have this middle point. So we can see that we had quite a lot of stuff overlapping, and we honestly choose the lowest one. I don't want to choose the highest one. We always, when we have few things overlapping, we want to choose the lowest thing, the lowest level right here. So this is how we came up with this level here. However, why I ended up taking my second partials on this breakout once price took out this buy sign liquidity, because I simply saw that momentum is dying off. You can see how much consolidation I had here. So knowing that it's election day, after seeing this massive consolidation, I wasn't pushing this trade. And when they took out these equal highs right here, I was happy to bank second partials right here, not even waiting for price to reach into this level here. I banked more partials. I moved my stop loss right here, because from 15-minute perspective, you can see that it happened here. It was a pretty neat rejection of this bullish fair value gap, of this bullish 15-minute fair value gap. So in other words, we had this order flow to the upside here on the 15-minute that I didn't want to see get broken, but unfortunately it did, because of course it was a consolidation. Price literally just tagged it and kept on running to the upside. So again, obviously it would have been ideal to see this consolidation, this T3 right here, get taken as well. But the most important fact, of course, is that we already took profits here. We already took massive profits here. So this remaining part was not a massive one. So is what it is. It was election day, and price gave us quite a lot of consolidation and messing around before it ended up running towards the T3. And right here, what we had was 10 a.m. high impact news. So if we would have held trade towards our original target, towards our main draw liquidity, pretty clearly would have spiked out of this position because of spreads, because of all of that after this 10 a.m. candle right here during the red folder with the news. So that is all what comes to this position. I hope it was insightful. I hope I answered most of your questions, and we will talk a bit later. Take care, guys. Have a great day.